When it comes to investing, I like to remind myself from time to time how investing works and that the process is worth the hard work. It might look hard for an investor to get to live off of dividends because the amount one receives looks tiny, but the things will get easier and easier by the time. A lot of videos on YouTube talk about this process, and I find it motivating to watch these videos, especially if we are at the beginning of the ride. Today's I'm presenting 14 stocks that offer a very high dividend yield and that pay monthly. Stocks that pay monthly are even more stimulating when it comes to investing, as the money keeps getting in the brokerage account at a very regular pace. I myself like getting the notifications from my broker. I receive several ones every month, and I can't hide to tell I would like to see them more often. By the way, I put a link in the video about the broker I use, that is Trade Republic. It is available for European-based investors basically. Anyways, let's get into it. The first stock I would like to highlight is Gladstone Capital. The fund intends to invest between $7 million and $30 million in firms with sales between $20 million and $150 million and EBITDA between $3 million and $25 million. It prefers to buy minority stakes. It intends to exit its interests through strategic acquisitions by other industry participants or financial buyers, initial public offers of common stock, and other capital market transactions. Dividend yield, 9.12%. Dividend safety, 21. Dividend growth, -1% per year in the last 5 years. Dividend growth streak, 2 years. According to analysts, Gladstone looks to be around its intrinsic value. Still, at this current valuation, the yield remains very enticing. The second stock of my list is Gladstone Commercial, not to confuse with Gladstone Capital. Gladstone Commercial is a real estate investment trust that acquires, owns, and operates net leased industrial and office facilities throughout the United States. Gladstone Commercial has paid 229 consecutive monthly cash dividends on its common stock, with payments continuing until January 2024. Gladstone Commercial made 5 straight quarterly cash dividends before beginning to pay monthly distributions. Gladstone Commercial has never missed or postponed a distribution since its start in 2003. Dividend yield, 8.83%. Dividend safety, 30. Dividend growth, 0% per year in the last 5 years. Dividend growth streak, 0 year. According to analysts, the stock price of Gladstone Commercial could go to $14.75, which is an 8% price appreciation potential. The third stock I would like to highlight is SL Green Realty. As of September 30, 2023, SL Green has stakes in 59 properties totaling 32.5 million square feet. This includes ownership stakes in 28.8 million square feet of Manhattan skyscrapers, as well as 2.8 million square feet for debt and preferred stock transactions. Dividend yield, 6.03%. Dividend safety, 40. Dividend growth, 2% per year in the last 5 years. Dividend growth streak, 0 year. According to analysts, SLG looks to be around its intrinsic value. Still, at this current valuation, the yield remains very enticing. Stock 4, Prospect Capital. The fund intends to invest between $10 million and $500 million per transaction in firms with EBITDA of $5 million to $150 million, sales value of $25 million to $500 million, and enterprise value of $5 million to $1 billion. The fund also co-invests in larger transactions. The fund pursues control acquisitions by offering various degrees of capital structure. The fund concentrates on single-agented club or syndicated transactions. Dividend yield, 13.73%. Dividend safety, 30. Dividend growth, -6% per year in the last 5 years. Dividend growth streak, 3 years. With a P/E ratio well under its peers and a price at the very bottom of its 52-week range, it looks like Prospect Capital is a good stock to buy now. Have a closer look at it. Stock 5, Motive. Motive Industrial is an internally managed REIT that specializes in single-tenant net lease industrial manufacturing real estate. The company actively acquires essential industrial production sites with long-term leases to tenants, thereby boosting the national economy and strengthening supply networks. Dividend yield, 7.69%. Dividend safety, 44. Dividend growth, 10% per year in the last 5 years. Dividend growth streak, 9 years. According to analysts, the stock price of Motive could go to $17, which is a 13% price appreciation potential. What I especially like about Motive is its operating margin that has been around 18% for the last couple of years. You know that I look very close to this metric as it says a lot about a company and assess its profitability. Stock 6, Dynex Capital. Dynex Capital was established in 1987 and is based in Glen Allen, Virginia. The corporation has been designated as a real estate investment trust for federal income tax reasons. If it distributes at least 90% of its taxable income to investors in the form of dividends, it is normally exempt from federal income tax. Dividend yield, 12.99%. Dividend safety, 40. Dividend growth, -6% per year in the last 5 years. Dividend growth streak, 1 year. According to analysts, the stock price of Dynex Capital could go to $13, which is a nice 13% price appreciation potential. The seventh stock I would like to highlight is Pennant Park Floating Rate Capital. Under normal circumstances, the fund expects at least 80% of its net assets, plus any borrowings for investment purposes, to be invested in floating rate loans and investments with similar economic characteristics, such as cash equivalents invested in money market funds. It expects senior secured loans to account for 65% of its portfolio. In the event of floating rate loans, it makes investments for 3 to 10 years. Dividend yield, 10.73%. Dividend safety, 23. Dividend growth, 0% per year in the last 5 years. Dividend growth streak, 11 years. According to analysts, Pennant Park looks to be around its intrinsic value. You should make further research if you would like to get the stock at a good price. Stock 8, Horizon Technology Finance. Horizon Technology Finance is a business development firm that specializes in lending and investing in early-stage businesses. It makes secured debt and venture lending investments in venture capital-backed firms in the technology, life science, healthcare, information and services, cleantech, and sustainability sectors. Dividend yield, 11.17%. Dividend safety, 40. Dividend growth, 0% per year in the last 5 years. Dividend growth streak, 5 years. With a P/E ratio well under its peers and a price at the very bottom of its 52-week range, it looks like Horizon Technology Finance is a good stock to buy now. Stock 9, Cross Timbers Royalty Trust. The company was created in 1991 and is headquartered in Dallas, Texas. Cross Timbers Royalty Trust operates as an express trust in the United States. It owns 90% net profits interests in some producing and non-producing royalty and overriding royalty interest properties in Texas, Oklahoma, and New Mexico, as well as 75% net profits working interests in 4 properties in Texas and 3 in Oklahoma. The company was created in 1991 and is headquartered in Dallas, Texas. Dividend yield, 10.85%. Dividend safety, 30. Dividend growth, 14% per year in the last 5 years. Dividend growth streak, 2 years. What I find intriguing is that this company have always had an incredible operating margin. What better metric to tell whether it can pay its dividends or not? You should have a closer look at Cross Timbers Royalty Trust. The 10th stock of the list is Oxford Square Capital. The firm invests $5 million to $30 million every acquisition. It plans to divest its investments within 7 years. It serves as TIC's investment advisor. It focuses its investments on firms with annual revenues of less than $200 million and market capitalization or enterprise value of less than $300 million. Dividend yield, 13%. Dividend safety, 8. Dividend growth, -12% per year in the last 5 years. Dividend growth streak, 1 year. Oxford Square Capital is for sure not a safe stock. However, when I look at the payment history of the dividends, I clearly see it has been paying dividends for many years. The company has never cut its dividends for 20 years. That's a considerable amount of time for one's lifetime. What if the dividend payments gets reduced? Well, it has been the case as you can see, but with a 13% current dividend yield, if even the company reduces the payments, the yield is likely to remain interesting. 8%, 7% or even 5 or 4% remains very interesting and well above the yield of many companies. It's worth thinking about it. The next stock I would like to highlight is the very famous AGNC. I like this stock. The corporation is classified as a real estate investment trust under federal income tax law. It would normally be exempt from federal corporate income taxes if it distributed at least 90% of its taxable income to its stockholders. Dividend yield, 15.5%. Dividend safety, 23. Dividend growth, -8% per year in the last 5 years. Dividend growth streak, 1 year. According to analysts, the stock could reach $10, which is about a 7% dividend increase potential. Stock 12, Orchid Island. The corporation has chosen to be treated as a real estate investment trust, REIT, under the United States federal income tax laws. As a result, if it distributes dividends equivalent to at least 90% of its REIT taxable income to its stockholders each year, it will be exempt from corporation income tax on that portion of its net income allocated to stockholders. Dividend yield, 17.14%. Dividend safety, 13. Dividend growth, -22% per year in the last 5 years. Dividend growth streak, 0 year. I included this stock in today's list as it has a very high dividend yield and it pays monthly. However, please beware that this is one of the riskiest stock I've ever seen. I wouldn't put a single penny on it. Stock 13, Armor Residential REIT. Armor Residential REIT invests in residential mortgage-backed securities, MBS, in the United States. Its securities portfolio is primarily made up of securities issued or guaranteed by the United States government-sponsored entity and the Government National Mortgage Administration, which are backed by fixed-rate hybrid adjustable-rate and adjustable-rate home loans, as well as unsecured notes and bonds issued by the GSE and the United States Treasury, as well as money market instruments. Dividend yield, 15.36%. Dividend safety, 21. Dividend growth, -12% per year in the last 5 years. Dividend growth streak, 0 year. Armor Residential has a low PE when compared to its peers and its payout ratio is getting lower around the 95% mark. Investing in Armor Residential is risky but worth looking at it. Remember, all these stocks pays dividends monthly. The last stock of the list is Ellington Financial. Dividend yield, 13.49%. Dividend safety, 30. Dividend growth, 1% per year in the last 5 years. Dividend growth streak, 2 years. The dividend payment history of the company has been a roller coaster. Not the most reliable stock of the list, frankly. You will have to accept the risk of a dividend cut when investing in Ellington. Still, the 13% yield can make you resist these counter performances. Thanks everyone for watching. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.